Joining us right now to tell us what she is seeing in the markets is Megan Horneman, Chief Investment Officer at Verdence Capital Advisors. Good morning to you.
Good morning.
We could talk about some of these earnings, or we could talk about what you think Jay Powell is going to do on Friday and how important ultimately that's going to be to whatever you think is happening around us.
Yeah, I think we'll stick with Powell just because the earnings are always important, but again, backward looking. So let's focus on Powell because he's the one who can really move the markets and give us some insight into what might happen in September. Personally, I don't think that Powell's going to really announce anything concrete about what he may be doing in September. I think it's going to be a lot of the same. I think he's going to continue to say we're data dependent, and I know people are really tired of hearing that data dependent, but I think that you're going to hear him say there still is pressures on inflation. The labor market's weakening. They do have flexibility at some point this year to cut rates, and they plan on doing that. But I think the timing and magnitude, he's going to try and temper some of those expectations.
So you think we're going to hear well, that's an interesting thought that he's not going to do anything in September. Is that what you're saying?
I think that there still is. I do not believe in the futures market where it's pricing in that 80 to 90% chance that they're going to be able to cut rates in September. The reason being is there still is a lot of information between now and then the Fed's going to get. So the 85% or 80% probability we have today, that could very quickly change as soon as we get the next inflation report. It can change after we get the next employment report. So I'm still on this data dependent path as well. I don't think the Fed, and I know I'm kind of a contrarian here in this view, what is the rush? We still have other meetings this year, and we still don't know what those tariffs that went into place starting August 1st, those negotiating tariffs, what that's going to filter to in inflation. And I know there's a lot of optimism around the inflation data we got last week. I personally was on vacation last week, and when you read some of those details in those reports, it's not as great as everybody thinks it is. And I really hope that the Fed is taking a look at that, because if they come in and they cut rates, or they come in this week and they come with a really dovish tone into how they're going to pursue monetary policy going forward, you're going to see these markets shoot right back up again, and this vicious circle of inflation come right back again. It's something I don't think they want to see.
So the thing that I can't figure out is whether you think that Jay Powell ultimately is going to be worried about inflation as a function of tariffs, or is going to be more concerned about the employment picture?
I think at this point he's going to be, I think at this point he should be more concerned about inflation. What he will be more concerned about, though, is inflation. Employment, the employment report, because we have seen some cracks there. They've been widening throughout this year, and that's been what I think the Fed's going to have to really take into consideration. I don't want them to ignore the fact that inflation is still here. Inflation in the sticky areas that he's told us about for the past couple years is a problem, whether it's services. We still have some in the housing perspective. I think these are the things he's got to remember that he does not have control over. So it's that very fine line. I think you'll hear him and Jackson Hole talk about the labor market. I think that when it comes to the September meeting itself, he's going to focus on what's the furthest away from his mandate. Right now, I think the risks for inflation are higher.
In terms, though, of that balance, do you believe that the long-term situation in terms of the inflation picture is a one-off, as the president and the administration has talked about, or do you think it's something that rolls for a very long time?
I don't think it's a long term. So, trying to decide what that long term really is. I think over the next 6 to 9 months, it's going to be a problem. There's going to be a lot of volatility around inflation. We don't have all of the trade deals completely done yet. And the ones that we got in August, what we saw from April, that 10% baseline tariff, we didn't see that start to show up in the data until really, June and July. So if we now take a look at the August ones, which the majority of these are higher than that baseline tariff, think about when that's going to come through. That'll come through maybe in that September CPI, which we really won't get until October. So you're looking at the fourth quarter being a really volatile period for what the true inflation picture is going forward.